if you guys are watching us on YouTube, or if you follow us on YouTube, which I highly recommend that you do, then you will also get a notification saying that this video is up. So we'll get some viewers from there. But also, because this is going to be on YouTube, or if you follow, there you go. Okay. Also, this is where you'll be able to see the recording afterwards, right? So let me show you actually how to do this. You go to youtube.com. You'll search for, excuse me, Lumiwealth. Lumiwealth. There you go. That's us right there. And then make sure that you like and subscribe us and push this little ringer button so you get those notifications. But also, you'll see here that this is where the that live video is playing. So if you were to click on this, you should be able to see the actual live video now. Or after the class, after this presentation, you'll be able to see the recording there as well. All right. Just want to let you guys know that. All right. Okay. So let's get started. Welcome, everybody. Right. So today we're talking about options trading using algorithms. Right. Very, very cool stuff. We just finished the course, the last cohort actually on Sunday. I think it went really well. We actually got some really, really good feedback from everyone too. By the way, we have here Neil on the line, who's the instructor for this. And I just want to say, Guy gave you some very nice kudos for the last class. So,
thanks to Guy. He's a good guy.
Yeah, definitely. Yeah, Guy's a good guy. Yeah, definitely. Cool. Okay. So what we're going to cover in this presentation here is, first we want to get to know you guys a little bit. We're going to say who's on the call. I'm going to do a brief introduction to Lumiwealth and kind of what we do and our offerings. Then we're going to talk about algorithmic option trading, like the theory behind it and why it's worthwhile. And then we're going to show you a demo. And then we're going to talk about the course itself. If you guys want to take the course, like I said, we've had rave reviews. So definitely, it was a really cool one. All right, so let's get started with who is on the call with us right now. So for those of you that are on the call, you have several different ways of doing this. Probably the easiest is just type into chat, right? So if you just type into chat and let us know what's your occupation, do you know how to code, right? And how much investment experience do you guys have, right? So I can tell you kind of my background here is, we have here one from Chai, we have student. I can tell you my background here. My occupation is I'm the CEO of Lumiwealth, right? So I wear a lot of different hats, basically making sure that we have a lot of really good courses and our technology keeps improving for you guys to make your lives a lot easier. We're also working on some pretty interesting new software projects that we could talk about down the line. So that's my occupation. Do I know how to program? Yes, I know how to program. I've been doing it for 25 years now. It's been a long time.
25 years.
It's been a really long time. Maybe up to like 23 years. I started when I was really, really young. Just love doing it. It's one of those things I always found to be a hobby. And how much investment experience do you have? Myself personally, I started around 2007. So what is that? 15 years, 14 years, something like that. Been through a bunch of ups and downs, you know. So that's kind of my background. For you guys, is type it into the chat here and let us know, so we kind of know who we're talking to, and we can kind of get to know each other a little bit as well.
Hey, Robert, I guess I can answer those 3 questions myself too, if you like.
Sure.
Yeah, so my occupation is I work as a full-time programmer for algorithms. I work, my primary responsibility is to Lumiwealth, but I do have some other clients as well that I help make some computer programs for trading various securities and strategies. Yes, I know how to program. I have how much experience do I have in finance? I have decades of, I guess, decades. I started in finance in the 90s. And I've been involved at various levels of organizations, all the way from, I did a lot of sales and individual people, like as a broker, and also a lot of executive management for startups and for online banks in the States and things like that.
Nice, great. Thanks, Neil. Awesome. I know you have a very strong background, especially in the finance side of things.
It definitely. Right. It's my stronger side.
Awesome. So I have one that just came out here. He says he's an SQL ETL developer and he's been investing for 5 years. That's great.
Cool.
Awesome. I think you have a very good background for what we're doing here, Juan. Okay, so while you guys keep typing that out, I'm going to move on to the next section here. We have another one, Michael Wilson, self-employed, no programming experience, 8 years investing. Awesome, Michael. That's great.
Cool.
I will say that we have another one here, Nima. I work at Bank of America as a corporate investment quantitative financial analyst.
Nice.
It's very cool. Awesome. I know programming. I have over 10 years of experience in investing. That's great. Fantastic.
Very nice.
So we have a bunch of courses here for the full spectrum. For those of you that have never coded before, we usually recommend to get started with the Algorithmic Trading course, which is paired with this one, right? Usually people that don't know how to code or coming from some sort of investment background or have never coded in Python, they'll start with the Algorithmic Trading course, and then they'll take some of the more advanced courses, kind of like this one, the Options Trading course, which is usually better if you have a little bit of programming experience already. It's less hand-holding in this course, but there's more hand-holding in our other courses in the Algo Trading course. We also have a machine learning course, which is also a little bit more on the advanced side. So again, usually people take those two together, or if you have some coding experience, they'll usually take that. And we also have another one coming out, very exciting. We're also doing a blockchain course. And that's one that we're saying we don't need, you don't need to have any programming experience to join. So that one's gonna be really cool too. So just to let you know kind of the landscape there of what we have. Okay, so let me do a little introduction. So who am I? We already heard a little bit about myself. I'll give a little bit more color to that. I've been in startups for a while, started quite a few different software companies, went and did my master's degree in finance. So I have a master's in finance personally, and then worked on Wall Street for quite some time. So basically moved to New York City, helped found a few different companies there. One of which, the company I was at right before this one, is a company called Voyager. It's kind of like Coinbase, right? I was employee number 4 there, right? It's like a crypto broker. Definitely feel very good about that one because that's one of the companies that I was very early stage, I think, employee number 4. And it's worth like $3 billion now in the stock market. So it's pretty cool. I feel like that was a really, really fun thing to start. And then now we're working on Lumiwealth. And Lumiwealth is, I'll describe to you a little bit about Lumiwealth and I'll pass on to Youll. But Lumiwealth, what we're all about is we're all about basically how can we use software to improve people's investments returns, right? And there's many ways that we can do that. And one way that we really focus on, of course, is our course offerings, right? We have a lot of really good instructors that have been in this space for quite some time, like, for example, Neil, who has a really strong background in finance and has been doing this software side of things as well for a while. Our machine learning course instructor, who's really good with machine learning, went to Stanford and all these other great schools. And very good at the machine learning side of things. And then we also have a new one now for blockchain, where we just got a really, really good developer, someone who's been doing this for a while and who can really teach people how to like build your own blockchain projects. So that's really what Lumiwealth is about. It's about education and providing also tools as well. We have something called Lumibot, which is basically an open source piece of software that you could use for free. And we include it in our courses to make your lives a lot easier so you can build these sorts of things and find new ways to make money. We're also going to be adding a lot of other software on top of that, basically like a website where you can like share your algorithms to other people and that sort of thing. We can get into another time though, but that's what we're all about at Lumiwealth, is really helping you guys make more money. Really is what it comes down to, using software to improve your investments. And Neil, do you want to tell them a little about yourself?
Yeah, I'll tell a little bit about my background. It's not overly spectacular, but this is who I am. I studied engineering at university at actually a military college in Canada, which is kind of like West Point in the States. So I guess that's kind of neat. I had a lot of good experiences there, but I went pretty much immediately into financial services. And I've had a variety of roles in financial services. I've had a lot of client-facing roles as a broker, as a futures broker, an options broker, as a regular broker, doing sort of the regular things for people. And I really enjoyed helping people do that. But I also spent a lot of time in technology as well, more along sort of like business analyst-y kind of stuff. Although I wasn't a business analyst, but I had good experience in between technology and the business side, that I was kind of a good in between on large projects to talk to both sides who couldn't really talk to each other all the time. At some point, I went down to the States. We finished up a project at the CIBC, and the guy I was working with, good guy, took me down to work at an online bank in the States in Delaware as an assistant vice president, dealing with parts of operations. After that, they kind of folded that with Bank One, but I was involved in a few startups. One of them, interestingly enough, was trying to get a commodities exchange launched in London. It was a perishable commodities exchange during the dot-com heyday. After that, things died down a bit. I went back to working in investment sales. I tried a couple startups, and about 3 years ago, I sat down and I really wanted to take the time to do something I'd always wanted to do, which was programming. So I took a step back and I started programming in Python with a singular focus on algorithmic trading. So like, don't ask me to help you with a website. I can't do that. But if you got algorithms and you've got trading involved, I'm probably your guy. I used, before I met Robert, I was heavily involved with Backtrader, which is an open source back testing, one of the most popular, back testing open source projects. And I'm one of the leaders in that community. If you're ever in there, look for my tag name Runout and you'll see me there. I helped a lot of people over sort of the last year or 2 years, and I really enjoyed it. And then when Robert approached me, he was like, hey, you'd be perfect to come join us over here. You've got sort of the right background, you've got the right caring to help people, as I can see in all the stuff you're doing with Backtrader, and we have a school, so why don't you come over here and you can help us build our bot out as well. So I came over and I've been extremely happy ever since. The last class that we just did was amazing on options trading, and we've built out, and I think Robert, you agree, in the last 6 months we built out a ton of capabilities in Lumibot. We have interactive brokers online now. We have futures trading, forex trading. We have options trading available. We have all sorts of intraday back testing available as well, which is really great. And we're just continuing to be excited about building it out. I've never been happier with work in my life than I am right now, and I look forward to maybe getting to know a few of you guys.
Awesome. That's great to hear. Thank you, Neil. So, and also, Neil is the head instructor for this course. So if you guys are going through this course, Neil's going to be your guy. Definitely a really good guy to be around. So if you have any questions, feel free to ask as well. We can get Neil to answer that. All right. Thank you, Neil.
You're welcome.
And a couple more things before, little housekeeping things. Like I said, our YouTube channel is where this recording is going to be. I'm going to throw this into the chat so you guys can access that very easily. All right. Another thing is our Discord channel. Discord is awesome, right? This is basically, so I put that link in there as well. This is what our Discord is basically a chat room where a lot of us will converse with each other. We all talk about different topics. We have our crypto, right, where everyone talks about crypto. We have, for each one of our different courses, we have private channels for each one of our courses so people get to know each other. We have our alumni channel where basically our alumni, right, people who finished, discuss, different things, including building bots. And then we have some of our also voice channels where people converse over. So if you guys were to join one of our courses, you get access to this where, for example, every Tuesday night in 2 hours, actually 8 p.m. Eastern, is we have our discussion hour where all of our alumni get together and everyone talks about how are their algorithms going. We sometimes will talk about some of the new stuff in crypto. There's one of our students has done really, really, really well in crypto. I think he turned $1,000 into 120 grand last time I checked in like a half a year, which is insane. Yeah, we have a lot, and he's been, teaching people about the different things like the small coins, whatever. But really good stuff in our discussion hour. We're also doing something where in Discord, again, if you're part of our one of our classes, we're going to have for each individual class, we're going to have a regular meeting that happens, right? So you get to know the other students and you kind of see how's everyone's algorithm going, how are people doing machine learning, how are people doing with their options, right? And you can kind of get to know other people there and learn from each other essentially, right? So Discord's great. Definitely make sure that you join. There's a lot of really smart people in there and great people to learn from. All right. Also, just want to say there's a survey at the end of the webinar. So make sure you fill it out. We read these surveys, and it really helps us a lot with improving these courses and our offerings. And then also don't wait until the end to pose questions. It's really nice when this presentation is interactive, and you could basically ask a question throughout. Right, so don't feel like you have to wait until the end. Feel free to ask questions throughout the entire presentation. It's great to have it be more of a back and forth rather than just a one-way conversation. All right, cool. So let's talk about algorithmic option trading. Why should you care about this, and what is it? All right. So first of all, algorithmic trading, what it is you're basically using an algorithm, software code, to trade for you, right? So actually, it could do one of two things. It could do, or both, right? It can analyze a bunch of data for you and tell you, this is what I think you should be doing, right? So we can get economic data. We could use technical indicators. We can get data from social media, from Telegram, Twitter, Discord, Reddit, right? We could get all sorts of different information from all over the internet, fundamental analysis, whatever. Plug it all into our model, and it'll kind of tell us, this is what I think you should do, right? It's the whole data science component of it. Then, and a lot of people opt for this as well. You don't have to, though. There's some companies that do and some companies that don't. Some people that do, some people that don't. But then what you could also do is you can take that information that you have and actually execute trades with it, right? So it's not just, I know what to do, it's I'm actually doing it for you, right? Which makes your life obviously a lot easier. You don't have to pay attention to so many things. You could be off on the beach and this thing's trading for you. It's a wonderful thing. I have a couple of different accounts that have algorithms trading for me. And all I do is just like every once in a while I'll check in. It's like, oh, wow, I made quite a bit of money. It's nice. It's a great feeling, actually. So that's kind of the whole thing of algorithmic trading. And there's a lot of companies that do this, right? And a lot of very successful companies that do this. Probably one of the bigger ones is Renaissance Technologies. There's a really good book by the guy that started this company called Jim Simmons, right? Jim Simmons' book. I'll find you guys the, there we go. It's called The Man Who Solved the Market. Really, really fascinating book. If you guys have never read it, I highly recommend that you guys read this book. It's all about basically this guy, and I'll put the link inside the chat here so you guys have the link. But it's basically about this guy, Jim Simmons, who was a mathematician back in like the 70s or something like that, and had the idea of, what if we could use computers to trade for us, right? Wouldn't that be an interesting way to make money, right? So it's his whole journey about starting that company, starting this hedge fund that eventually turned into Renaissance Technologies and is now, I think, the most successful hedge fund of all time, if I'm not mistaken. I can't think of any hedge fund that has ever done better than these guys. It is absolutely ridiculous how much money these guys are making. The book is fascinating. They talk about everything from the very beginning up until the end, where these guys are like buying houses and forgetting about them. Like, wow, it's like
I've got several of those myself.
Yeah. Yeah, it was funny. There's one guy like bought a mansion, and he's like, "Oh, I forgot that even existed." Like, what the hell? Yeah, that's how much money they're making. It's crazy. To give you an idea, right? These guys, last time I checked, and I think they're actually worth more than this now. They're worth 110. They had 110 billion dollars in assets they're managing, right? I think it's actually more than that now. They have an average return of 39% on average, and this is over, I think, a 30-year period, right? This is over 30 years. Give or take a few years, approximately 30 years. 40%, right? Think about this. The stock market makes you 10% per year return. And I know everyone's thinking, yeah, 40%, the stock market's up a lot this year. That's not every year, right? You're going to have years where things crash. You're going to have years where things do really well. We happen to go through a very good period right now. What about 2008 when things fell 50%, right? What about, the 2000s when things fell like 40%, right? There are these big losses. These guys never went through that. I think their worst situation that they ever had was, I think they lost money for like 3 months and then made it back, right? It's like one time when that ever happened, So I'm just checking the chat here.
Yeah,
Daniel says, sorry?
I was just saying, he's asking if we can do option spreads in the algorithm. I just said yes. Yeah.
Absolutely. I believe one of the examples that we give actually uses spreads, right?
Yeah, it does. It's vertical
Yeah.
spreads. We're going to do a bear call spread.
Yeah.
And that's one of the 4 vertical spreads.
Yeah, exactly. It's actually one of the strategies that we go through in the class. So we'll spend a lot of time going through that, right?
And coming up as an example.
Yeah. Cool. So thank you for that question. Great question. So yeah, so Renaissance Technologies, have done extremely well, right? Just to give you an example, right? These guys, if you had put $1,000 in the stock market over 30 years, you'd end up with about $17,000, right? It's a good return, right? It's 1,000 turning into 17,000. If you were to get the returns like what these guys get, the 39% on average returns, that $1,000 wouldn't be 17,000. It'd be about $24 million. It's a very significant difference in wealth in the long run in your life. I mean, so getting that extra little bit of return really, really makes a big difference. Right?
A little bit.
Slightly better off. Just a couple
39%, a little bit of return. What are you talking? What are you talking about? That's a home run every day at the plate.
Yeah, definitely. So these guys are definitely like the top dogs in this, and they've done really, really well, and they're extraordinarily rich because of it. But they're not the only ones, right? We also have Two Sigma that's doing something very similar. These guys manage $60 billion worth of assets. Citadel, very similar. They use lots of algorithms to do trading. They do a lot of high frequency trading, these guys as well, market making. They manage $32 billion worth of assets. Bridgewater, these guys use a lot of data science to inform the decisions to figure out what should you be buying, what should you be selling, that sort of thing. You guys probably have heard of Ray Dalio, that has been in the news a lot lately. He's the guy that founded Bridgewater, so they're very heavy into sort of stuff as well. And then another really interesting one is D.E. Shaw. And a quick little bit of trivia. Does anyone know who used to work at this company, D.E. Shaw? A very famous guy. I guarantee you know who this person is. Does anyone know who used to work there at this D.E. Shaw company? They also do algorithmic trading. All right. They also do the sort of thing where they create these machines like what we do here, like algorithms. They'll automatically buy and sell stocks and bonds and options and futures and all that kind of stuff automatically based on algorithms and on data, right? So I don't see anyone guessing yet in the chat. So the person that used to work here was Jeff Bezos, right? So Jeff actually used to work at D. Shaw back in the day, and that's where he came up with his idea for Amazon, right? When he was working at D.E. Shaw, if you guys ever read stories about him, he used to help build out these trading algorithms. And then looking at all this data, he started to see, oh, the internet's growing really quickly, and this makes a lot of sense. And that's kind of what gave him the idea to create Amazon. He was getting paid very well there, of course, right? All these companies pay very well. But he decided to quit, went off, started Amazon, and the rest is history, right?
I can still remember when that started. Everyone's like going, books? Really? You're going to sell books? That's kind of how they started off.
Yeah, little did they know.
You mentioned also, Robert, in that grouping about high frequency trading. I'm not sure if everybody knows what that is, but just briefly, high frequency trading is when algorithms are in and out of the market at lightning speed. Like we're talking microseconds, milliseconds are probably long now, in and out of microseconds, trying to shave a little bit here, shave a little bit there. And so if you hear people talking about HFT or high frequency trading, that's what it is. It's not the type of stuff that we're going to be doing, because you need to have $100 million worth of equipment and PhDs all around to do that. But just thought I'd touch on that.
Sure. Yeah, so Daniel asks, so where does the software run, on your server or on my computer? You could do it either one, right? So we could show you how to set this up on your server. It's not very difficult. You basically wrap it in like a Docker container and you put it up on a server, or you could just run off your computer. It's really up to you. It depends on where you feel more comfortable doing this. I personally like running my own algorithms on a server, just because what if my power goes out? What if I shut down my computer? What if I'm traveling, right? I'd rather just run it in a server, right? but it's up to you guys. Everyone's a little different, right? Everyone has their own situation. And what about the data feed for the software? Well, the data it depends on where you want to get the data from, right? So there's many, many different ways that you can get data, right? You can get data from the Federal Reserve. You can get data from Yahoo Finance. You can get data from your broker for pricing information. You can get data from Reddit and Twitter, right? So it just depends on where you're getting it from. You can get data plugged in from all sorts of different places.
I would just jump in on that though, that when you're live trading primarily with options, you're going to get your data from interactive brokers, and it'll come in from there, because you're probably not going to, the amount of data that they provide you should be enough. If you have an extreme strategy, then you may have to bring in your own data, but that's fine too. You can do that too.
Cool. Thanks, Neil. Awesome. And thanks, Daniel, for the question.
One other thing I would just say on that point, while we have it up here, is that getting data for options when you're back testing can be challenging, and we spend a lot of time in the course talking about different sources, different places you can get it, how to massage it. We set up algorithms just to download data from public sources that you can run overnight and stuff like that, and we have those as part of the course.
Cool. Great. Awesome. Thanks, Neil. All right. Cool. So that's a little bit about hedge funds in space. So why do we want to do it specifically for? Sorry, I think
there's another question there. Yeah, sorry.
Yeah. So Nima asks, what's the best data source and what are the average costs of receiving real data? Neil, do you want to take that?
Yeah, we actually don't have a really great answer for that just yet, because we haven't decided which one we want to use. There's a number of public data sources that you can get for free that are actually pretty good. One of them is on Dolt, and you have to go to Dolt and type in options. It'll be the only one that comes up, and it's like Dolt Hub. It's like GitHub but for databases. And there's one there that has some really excellent market returns for day data going way back, like across a broad spectrum of securities, and it's day data, but it's only it tends to be only not candle data, it's like bid ask data and last at the end of, but they usually have like all the Greeks are in it as well. Yahoo, of course, is a pretty decent source of data for the underlyings, at least anyway. I've been using predominantly for the moment interactive brokers using minute data, because we've been able to build some algorithms that can time delay it enough that they don't get mad at us, and we've been able to get a lot of downloads for free that way. And the last one I would say is you can look at something like IQ Feed, and there's a number of other ones, but those ones tend to be expensive, and I think that's kind of what Robert and I are trying to figure out, where we want to partner with somebody on the long term, but they can get expensive. For options data, it comes at a premium for sure.
Yeah, so there's a whole spectrum of everything from free, which is Dolt Hub has free, to your broker, I think, which is probably one of the best sources, interactive brokers or TradeStation or whatever. There's a bunch of different ways you can get data, all the way up until like the paid data, which is obviously going to cost more if you choose to get that. You don't have to, though. It's not a requirement for this class. Right?
Yeah, and if you were going to get paid data, one of the best sources to go to is the Chicago board, and they have just to go right to the source, but it's not cheap. It's not cheap. So we show you all the cheap ways to get data, and then if you want to pay for more, we can figure out more stuff after that.
So Nima also asks, what's the common frequency of the data? It really depends. You can get data milliseconds apart if you're thinking about stocks, right? You can get very, very frequent, like tick level data, even from things like Alpaca. You can get that for free. And then you can get everything up to like daily data. It depends, right? It depends on what specific data you're looking for. Is it stocks? Is it options? Is it futures? Is it whatever, right? You're going to have a whole spectrum, right?
Robert, I would jump in on the options side and just say that the two most common frequencies that we're using are minute data and daily data. And for minute data, we will resample that data into larger data frames if you want to run signals off of, say, 5, 10, or 15 minutes. Daily data usually just stays as daily data, but when you trade live, you can have your stuff come in 5-second bars. You can have it come in tick data, or just as minute data bars.
So there's a whole spectrum they can get, basically. Cool. Thanks for the question, Nima. Awesome. Okay, so getting back to our discussion here, why we're using algorithms to trade options. So we talked about why we want to build algorithms in general, right? We see that a lot of companies are doing very well at this and whatnot. But then why do we specifically want to use this for options, right? Because options actually uniquely are suited very well for algorithmic trading, right? So first of all, options are very complicated, right? So why do we want to use this for options, right? First of all, options are complicated. The strategies just inherently are more complex. If you're doing like spreads or something like that, it's not that hard to do that just on a regular broker. But if you're doing spreads on 20 different stocks and in different time intervals and stuff like that, that gets really complicated really quickly. And software is really able to help you a lot with that, right? Being able to go in and out of those, automatically place those, it'll make things a lot simpler. Another one is that you'll be able to trade even when you're away from your computer, right? So you don't have to sit in front of your computer all day and running options calculations or using your broker and figuring out how things work, whatever. The software code works for you. You go off, go on vacation, go to your day job, whatever you want to do. This will be done for you while you're even away from your computer. Another really important one, and this is one I think is very, very important, is that you can back test your strategies. And what back testing means is that, let's say I have some specific option strategy, right? Where I like buy bear spreads, or if I'm doing like covered calls or whatever it is that I'm doing. A lot of people just go based off of what, someone on some website will tell them, oh, this is a good strategy, you should follow this, whatever. I mean, let's check that out. Let's see if that's actually valid or not. And what you can do is you can get data for the past 10, 20, 30 years or whatever, going back a bunch of time, and run your strategy over that time frame as if you were starting in 1990 and you traded through each year. And basically, how would your strategy have done, right? And I think that's very important to understand. Basically, is this a good strategy or not? It's not a gut feeling. You actually have the data to back it up, right? So that's really important. Back testing is very, very important to do. We're strong proponents of that. Then there's also, it takes the emotion out of your trading as well. Some people will trade and emotions can be good, but they could also really mess you up a lot when you're trading. You get a little anxious or whatever, like, oh my goodness, I want to get out of this. If you have an algorithm running for you, it's very calculating. You don't have to worry about emotions getting involved and messing you up. And then another thing that's really important is that you can trade several strategies at a time. Right? I actually spoke with someone today where we're able to actually run a couple of different strategies all at the same time. Maybe one thing that's like trading stocks, the other one that's trading futures, maybe oil futures or something like that. Another one that's doing option strategies, and you can combine them all those together, and you can find out, if I were to combine them together, what would I could back test to find out how it would have done over a period of time. And I could also just run those strategies all at once, so I don't have to sit in my computer trying to figure out all this stuff all day long. It's just kind of working for me, right? Cool. So I see a couple of chats in here. I see that you guys have been going back and forth.
I was just going to say, Robert, there's another cool little thing too about, and then we'll jump off of that, is that, when you take the time to back test, paper trade, and implement a strategy, it takes a lot of work. And the fact that the strategy is now running by itself frees up almost 100% of your time to go do it again, right? So now you just keep making more and more and more strategies, and the monitoring doesn't take very much. So I think that's a really key component to using algorithms.
Yeah, absolutely. Absolutely. It makes your life a lot easier, right? Just create a strategy that makes sense and just run it. And you can keep coming up with newer and newer ideas and different ways to make money. So yeah, absolutely. I agree with that.
Hey, Robert, I answered a couple of these questions, so maybe I can just comment on them for you. So
Sure.
they were asking if there's going to be indicators built in or custom. Now, of course, you're using Python and coding, so you can do any custom indicators you want to put the time and effort into build. And we import a library and we teach you how to use it. That will work with Pandas data frames inside of our bot, and allows you to do anything from like Bollinger Bands and basically, I think when we looked at that, Robert, just on the weekend, there must have been something like 200 indicators in there. It's a Pandas. There you go. Yeah, so if you have a look at it here, if you scroll down and actually scroll down more towards the bottom, You'll see a long list of all the indicators about 2/3 of the way down. And it's based off of TA-lib, which is sort of the gold standard for indicators. Keep going down there, Robert.
There you go.
There we go. Now
So
these ones aren't in there, so
indicators.
skip this list. Skip the first list and go to the rest. Yeah, because they need TA-lib installed, which you could do, but basically this gives you all of the indicators that you could possibly want to try to get going to sort of build your strategies. It just goes on, the list goes on and on and on. If you scroll down there, Robert, you'll see just a massive amount of ability. And this is open source, and this is just one we show you how to use. You can find any open source indicator library you want and bring it in and use it. Like this is just this one. So you could use TA-lib if you're inclined, BTA-lib, there's a Finley that you could use. There's a whole bunch of them out there that you could import, just import it into the bot, grab your indicator, feed some data frames into it, and away you go. You're off to the races, just with crazy amount of sometimes I can't believe this stuff is free. That's the world we live. That's the world we live in, you know.
Yeah, definitely. So if you're interested in indicators, there's literally hundreds of them that they could use right out of the box. They're very, very easy to use.
And it includes things like statistics. It includes things like looking at the performance of your portfolio and how it did. And it just kind of goes on and on. So the answer is a big definite yes.
Yeah, there's a lot of them. I'm going to start from the top here, where you guys were talking. So another one. So it does the basic membership provide full examples of completed option strategies? Yes, absolutely. There's quite a few strategies that we introduce you to. So a bunch of stuff, covered calls, spreads, like there's lots and lots of different example strategies that we introduce you to. So when you join the course, not only are you going to get access to all those strategies and obviously the live component, you're going to go through that, but even code that we add in the future, you're going to get access to that as well. So as we add more and more strategies over time, you're going to have access to all those. You're going to have access to the code, be able to make your own modifications, do whatever you need to do with it. So it's lifetime access when you buy the courses. It's lifetime access to the code, lifetime access to our community, and lifetime access to any future courses that we're going to be doing on this. And we run these courses on a regular basis too, right? So you'll be able to join in whenever, right? Another one. So let's see. Daniel asked a question about indicators. We went over that. And then Nima asked, in these courses, do you teach how to incorporate news or web scraping the news? Yes, absolutely. So we cover that in our algorithmic trading course, how we can like get different sorts of news data. We get things specifically from Reddit in that course in particular. And then our machine learning course gets really deep into actually scraping news and using machine learning to actually go over that news and figure out what we should be doing with it. So if you're interested specifically in news scraping, we cover it in algorithmic trading, and we cover it really intensely in machine learning as well. Right? Okay, great. Okay, thanks for all those questions, guys. That was great. So I'm going to move on here. Neil, do you want to take control from this point on and kind of walk through everyone?
Sure. Well, I'll leave you control the screen, but I'll just take over talking. So these two, we're going to do two examples here, and they're actually really self-contained in the video, so I'm not going to talk a lot outside of them, but I'm going to show you how two strategies work. The first is going to be the Strangle strategy. This is a link that we're showing right now on Investopedia, which I always find has like the sort of a really good summaries of the strategies. They have little videos and they can compare them to other things. So this long Strangle strategy is when you buy a call and you buy a put. You have an expectation that wherever the price is right now for the stock, that it's either going to go up or down a lot. Perhaps you're expecting a big surprise at the next earnings that hasn't been factored into the market, and you figure it'll go one way or another, but it won't stay put where it is. So you pay the two premiums, one on the call, one on the put, and you're hoping it'll go up or down. And we're going to build a strategy around that, and you'll be able to see that in the video. So why don't we... the next one's going to be, maybe we leave that and we'll come back and already, well, okay, we'll just do it quick now. So a bear call strategy is a vertical spread strategy. basically what you're doing is you have, in this particular vertical spread strategy, you're expecting that the underlying is going to go down. So you're going to sell a call and buy a call, but you're going to sell a call at a strike that's nearer to where you are, and you're going to buy one that's farther out, so the premium is cheaper. And basically, you're trying to capture some premium on the downside, but limit your loss, potential loss on the upside. And so yeah, so here's what it looks like here. You actually, that chart down there with the
This one.
one to the right. One of the, yeah, that's a good example, because what this shows is the actual how the call would behave and how both calls would behave. Oh, that's not the right one. Anyway, let's go watch the videos. I don't need to talk too much about these things right now, because I do in the video. I kind of go over them. So let's go look at the first. So we're gonna step back a little bit. Now, the reason why we have the video here is because I wanted to show you the bot in action for both of these videos, but of course it's nighttime, and you know, we couldn't do this right now. So I recorded these at the last webinar, which was, what do you think, a couple months ago, or how long ago was that?
2 months ago.
So I just so when you see the dates up here, there's no point in re-recording it. It's the same thing. So that's why the dates are a bit older when you see them. So go ahead, Robert.
Cool. Okay, so I'm gonna hit play for you guys here.
This is the long strangle strategy. There's a link in the presentation. You can go look at it on Investopedia for a full description. This graph here shows the profile. Basically, we're going to be buying a call and a put. It's designed to take advantage of a big swing in price in the underlying. So I'm going to go through reasonably quickly here and just have a quick look at some code. This is the code that's going to run the strategy. It can be found on our GitHub site. It's under strategy examples. It's a strangle strategy. Here's a description of the strategy. We initialize our variables. These are the stocks that we're going to use. All of them are going to be customized to the specific strategy, and you can set it up any way you want. I'm not going to lie, when you do option strategies, it's a little bit more work than when you're doing trading just sort of stocks, or doing an RSI, or a simple moving average or something like that, but it's worth it. Every option strategy is going to have a trading pairs dictionary. Trading pairs dictionary is going to be keeping track of all the detailed information that you need to keep track of for this strategy. If I scroll down real quick here, you can see there's a helper function to build it down here. Lumibot works in life cycles. There's this starts off with the before starting trading life cycle. This is where we're going to set up the initial dictionary. I'm not going to go through this here. You'll learn about this in the course. And then when you get into the iteration, this is where we start selling and buying. We always sell first, try to raise cash. If we need to, when we're long anyway. And so here we're going to just point out something, sort of specific to this strategy. We look for the price move here. And then what we do is we compare it to the threshold that we've set that we're willing to take our profit on. For this particular example, the threshold is already low because I want to make some trades. And then we create orders and submit the orders by liquidating our positions. When we set up the initial positions, we do it here in create positions. Just going to point out a few key things here. We're going to buy all the prices. We'll get all the prices for the underlying and for the calls and puts, put them in our dictionary, and we use those for our analysis. We will be looking at the information from Yahoo Finance, getting the ticker information. It's very helpful for us. Try to get the days to earnings and try to find out if it's too close or far enough away that we can make the movement. Here we're going to do some sizing. You can see here we're going to create some sizing based upon the overall position in the portfolio. And you'll see that when we execute the strategy that all the different pairs are roughly equally sized. And finally, we create our options and our puts, and we're ready to start trading. So now we've hit go and we're ready to start trading, and Lumibot's going to go into motion. I'm doing a paper trading on an account with a $40,000 budget, even though it says 250,000 in the paper trading account there. We have a maximum number of trades of 4 trades, so we'll have 8 positions altogether because they're in pairs. And you can see Lumibot's going through the process of doing the analysis, finding out which pairs are best to be purchased, and then it goes ahead and purchases them automatically all by themselves. I'm not doing anything at this point. On the right-hand side, this is Interactive Brokers Trade Workstation. If you're not familiar with it, it is a old tried and true trading station a lot of people use. And when we're using our program, we have to interact with Interactive Brokers directly to do the options trading. Now, there would have been a bit of a time lag in there. I've kind of edited out sort of the waiting time for the next iteration. But you can see here that it sold some positions and is buying some new positions and putting them on for the strategy. I'm going to wait one more time. I think I sell out a little bit more and reduce the number of positions here. Again, there was a bit of editing out and blank time waiting for the next iteration. But you can see it all runs smoothly and automatically. And this is what you're going to learn how to do when we get into the course together. We're going to teach you how to build these algorithms. If you have trading strategies for options, we'll teach you how to codify them and how to run them and how to do them in Lumibot and trade with Interactive Brokers.
Well, awesome. So what do you guys think about that one?
Well, I'm not going to lie. I thought it was great.
Makes sense. Makes sense. All right. So we got a question here. Cool stuff. Yeah. So basically, you get to see the bot is automatically trading in there. We put together a Strangle option strategy and just automatically was executing that for many different tickers, just automatically for you. All right. Let's show you another one here. Cool. Can you explain what Lumibot is? So Lumibot is an open source library that we've developed, right? So it's basically software code to make it a lot easier for you to build these bots yourselves, right? So instead of trying to build things from complete scratch, we give you the tools to make it a lot easier for you. They're free and available tools that we give to everyone. And when you go through our courses, we teach you how to use them to make things happen much faster and much easier for you. So Terry asks, how can you learn this if you're a complete beginner? So we have a course, our Algorithmic Trading course. This is our options trading course, which is a little bit more advanced, right? But we have our Algorithmic Trading course that a lot of people will start off with. So that course is made for if you've never coded a day in your life before, right? There's a lot of people who go through Algorithmic Trading, brand new to coding, brand new to Python, have never done this stuff before. They can go through that course and learn. And let me show you here. Actually,
I would add on to what you're saying there, Robert, that in our course we had at least 2 people who went through the basic course, the algorithmic course, and we're taking now the options course, and they were quite well prepared to take that.
Yeah, absolutely.
And they hadn't coded before when they started that.
Yeah, absolutely. So if you go to lumiwealth.com, this is the algorithmic trading course I'm talking about, right? This is the course that's made for absolute beginners. Even if you've never coded a day in your life before, we'll teach you how to code and we'll teach you how to build these types of algorithms, right? And then the more advanced one is then you can go into options, algorithmic trading for options, and that's the more advanced kind of course where we'll take it from here and we'll take it even further, right? So that's the course right there. I put it into the chat if you're interested in this algorithmic trading course. All right. A lot of people take the two together, right? We have quite a few people that have signed up for both the algo trading course and what we're talking about here, the options trading course, right? People do the two together usually. All right. Yeah, no problem. Thanks, Terry. Okay, cool. Let's show you guys the next video here as well. Right. So this is another strategy here that we're talking about, the bear call spread. So let me turn this video on and you guys can have a watch.
We're going to go over a strategy called the bear call spread. The bear call spread is a long short strategy using calls. It's anticipating that the underlying is going to drop in price. And you can see here in this chart, you go short a call at 220, you get the premium for that. You're going to go long at 230, it's going to cost some money. The idea here is that the underlying will drop in price and you will get a profit of 235, and you'll also limit your losses should the underlying go up in price. Now I'm going to show you Lumibot. I've written up this in code, and Lumibot is going to trade a number of securities on the bear call spread. On the left side, you're going to see the logouts to screen of Lumibot Trading. On the right-hand side, you have Trader Workstation. You can see the securities popping up as the orders are placed. When it settles down for a second, we're going to have a look at one of these. I guess we could look at Airbnb right now. You can see here, for example, the short call is at 150 and the long call is at 157.5 as per the bear call strategy. We have a number of criteria selecting which stocks are going to get selected. We'll teach those in the course and how to do that. You may have your own ideas and algorithms that you want to trade. They're all customizable using the Lumibot strategy in Python code. So here, what we're going to get is the initial stages of the strategy is just about finishing up. You can see the simulated trading notification on the bottom right is showing all the completed trades. For this particular execution, we were only using 10 units or 10 contracts per underlying, so short and long. And I did just right now, I just did a clip of some time waiting for the next iteration. And you're going to see Lumibot's going to be calculating which of the underlyings it wants to sell and get rid of and close out the trades on, and establishing new positions. When you do the course with us, you can have your own ideas that you want to trade. You're going to have inspirations that you're going to want to create algorithms for. Lumibot is built to handle options and a wide array of other securities, including futures contracts, forex, and stocks. We can also do a number of back testing with Lumibot as well. This is an example of the bear call spread. I hope you enjoyed it, and maybe you'll be able to attend one of our courses one day, and we'll see you there. Thanks.
Awesome. Thanks for that, Neil. Cool.
Excellent.
Any questions around that one? All right, so these are two strategies, by the way, that you'll get the code for when you're actually going through the course, right? So you'll actually be able to see these things running in the course, but then also you'll get all the code. So you could, just use them out of the box, right? If you wanted to, just use them, run them on your computer. Or you could take them, modify them, and use them as a template for whatever else it is that you want to do. So there's a lot of code there already for this, and it really makes your life quite a bit easier.
Hey, Rob, I would just comment on the Strangle strategy that it's available on our website if they want to look at it. It's public. It's in our Getting Started. I'm just going to put a link here. So it's kind of neat to kind of go look at the code that we just showed you. It may have been modified a little bit since then, but it's the same. So
cool. Awesome. Thanks, Neil.
Pleasure.
All right. Okay. So those are the two strategies that we want to show you today. Like I said, there's a lot of strategies that you get when you go through the course, right? So it's available for paying customers, right? We have lots of different strategies that we give to you. We're building a big library and we keep adding more and more into it. So like I said, when you guys sign up for the course, not only are you going to be able to go through the course itself and learn from other students and from Neil, right? But also you get access to this whole library of code that keeps growing and growing. So it's another really major advantage of being in the course. Right? So let's talk about the course itself, right? So I have a link for you guys here, and I'll put the link as well into the chat so you guys can follow along if you'd like. Right. So here's our options trading course. Right. We have essentially 3 different plans for the course. We have a self-directed plan, which is basically you're going to, learn kind of on your own, but you have access to the videos. You're going to have access to our basically our community, right, of everyone who's actually taken the course before along with you. You're going to get access to our discussion hour, like we were talking about earlier. And all those nice goodies. You're also going to get access to all the code with this one as well for the self-directed plan. Now, our most popular plan by far is our live classes plan. And this one's awesome. Basically, you get everything from the self-directed plan, which means you get all the past recorded courses, right? So you get all the videos, you get access to the code library, you get access to our community, which is quite a few different things we have in our community. But then also with the live classes, you're going to get access to basically taking this class live, like with, for example, Neil being there. And you guys can ask questions just like this, right? You'll be able to turn on your microphone, you'll be able to turn on your webcam if that's what you'd like to do, or just chat. And then, when you're going through the course and you're, wondering what is this and why are we doing this sort of thing, you could ask the questions directly. You can interact throughout. It's very much like being in a real classroom where you really get a lot of hand holding and a lot of help. Neil is fantastic at messaging people on Discord as well. So he'll really get back to you quite quickly. He also will jump on one-on-one calls with you if you have to. So really holding your hand through this to make sure that you, by the end of this course, have a working bot that is done the way that you want it to be done, right? So live classes is really our most popular plan that we have by far, right? Then we also have a project help and tutoring plan. And this one is basically taking everything from those past two. So the video recordings, you get the access to our community, you get access to our coding library, you get to be part of the live classes, right? But then also on top of that, for the project help and tutoring plan, you get really like white glove service. We will spend as much time with you as is absolutely necessary. Actually, many times we even like sit down and write code for you, right? So if you need some help with that, we could actually help you write some code. I've written code for some people. I think, Neil, you've written code for some people as well.
Yep.
Throughout the class. And it's like a white glove service. We'll really help you out and make sure that, we'll spend all the time that you need to make sure that you get the result that you want coming out of the class, right? Okay, so that's a really good one as well, the project help and tutoring. Here are the prices for all of them, right? You can see here, lifetime access to video library for options trading, the self-directed class, right? Lifetime access to a library of code, access to all future videos and code, access to Discord community, so our whole community around all this stuff, lots of instructor support, and then access to weekly discussion hour for the self-directed class, and that one's $948. You can pay in installments, by the way. It's not written on here for some reason. I thought we added it, but basically you can pay for this in installments as well, right? So this is not $948 up front. You can pay it over 5 months, over 3 months. You do that sort of thing as well. Same thing with these other course plans here. So the live classes, I said everything from the self-directed, plus you get all this in-class time. You get lots of time with Q&A. Neil will spend a lot of time with you to make sure that you're going through this material well. And it's $3,500. I believe we have an early bird special right now as well, so you get an extra discount if you buy sometime soon. And you could also pay that over a 3-month plan or a 5-month plan. Basically, once you go through, you'll be able to pick that once it's in your cart, right? And then we also have the project help and tutoring plan, which, like I said, is the white glove service. You really get a lot of help, a lot of one-on-one time. We'll write code for you if we have to. We'll really make sure we'll spend a lot of time with you to make sure that you get exactly what you want out of this course and have some really great algorithms coming out. And people ask me about this too. The project help and tutoring it's even longer than the 8-month period, or sorry, 8-week period, which is the course. This course is 8 weeks long. Even after that, we'll spend time helping you out to make sure that you get the most out of these classes. Right? I see that you guys put some stuff in the chat. Yeah, so Terry asked, what's the beginner course again? Algo trading. Yes, exactly. So this one that we're looking at here is options trading. It's a little bit more of the advanced courses. If you, a lot of people buy the algo trading course first or buy the two together. If you buy them together, by the way, if you buy multiple classes at once, you actually get a discount. You get like a bundle discount immediately, gets added to your cart automatically. And a lot of people buy algo trading and options trading together to kind of be able to go through that whole process, right? Daniel asks, what's in the video library? So video library is basically the past recordings of all the courses, right? So you'll be able to watch the videos from the last course, right? Which we just finished up right now. So you'll be able to watch that and see exactly what's in there. And then you also get access to a few other small courses. Beginner's thing for Python is in there. I believe it's getting started with Python or something, we call it that. You have a Python for Finance course in there as well. So you get quite a bit of stuff from the video library to help you out on your learning journey. All right. Okay. All right, so I'm going to scroll down a bit more here. There's a lot of stuff that you guys can read, so feel free to read over all the stuff if you'd like. But I'm going to go down to the course curriculum and talk about how we have structured this course and what you're going to actually be learning in the course. So it's basically 3 parts, right? So the first part of the course is option fundamentals, right? And this is basically where you're going to get to know everyone in the class. First of all, the first day is always really fun because you get to know other people in the class, and there's a whole community aspect to it where you get to know each other. So we spend a lot of time on that. We make sure that you get all set up your computer and whatnot. Then we go over some option fundamental stuff. And I believe, Neil, you even had some of these cool, there's really cool graphs. I don't know if you have those ready to show off.
Can we switch screens?
In a bit. Yeah, let's finish going through this, but you can show off some.
Yeah, I'll show you afterwards. Essentially, we spend a lot of time explaining options, how they work because they're complicated, and how to use like in the next week, how do we use Greeks and different ways to measure them, because they don't just trade directionally like other instruments. They trade in very strange ways.
Yeah, and we go over a lot of code and we go over a lot of data for you guys to be able to see that. Actually, there's some really great graphs that Neil has that he shows off. So like these 3D graphs to show you, if you were to buy a put option, what would happen over time? All these sorts of like really interesting ways of looking at options and their data to help you understand better how to actually perform like a winning trade, right? So we go over a lot of that stuff here, and it's going over the option fundamentals and basics, but it's really taking the route of going through it using data, so you guys can really see how all this stuff works and you can play around with yourself. You get a lot of code to mess around with there too.
Yeah, it's really important to have a foundation on the theories of option trading, and at the same time preparing yourself to write algorithms. So we look at the fundamentals, and we also look at data, and then we start to push towards building algorithms.
Yeah, absolutely. Cool. So that's part 1, getting you started in option fundamentals. Part 2, what we do is we go over live and paper trading. We go over back testing, right? So we'll teach you how to build a strategy, build an option strategy, and then how to take that option strategy, back test it over the past couple years, see if that strategy is a good decision or not, right? That's very important. It's important to know whether the strategy is going to work for you or not, right? So we focus on the back testing side of things to make sure that this is a strategy that's going to work for me because why? Because I've gone over this over the past 10 years, and we saw that in the past 10 years it performed very, very well. So it gives us a good indication that this is a good basically thing to use. And then once you figure that out, once we've been able to back test some stuff, that's when we can take it live. And it's very simple. It's just flip a switch to make it go live, right? Back testing and then flip a switch, make it go live is the same code. So you go from building out a strategy, testing it, seeing how it would have done over a period of time, then trading it like paper trading. You'll take money first, right, to make sure it's working properly for you, and then you can actually run it live. And we have the whole process going, so it's really seamless and easy for you to find good strategies that actually work over a long period of time.
Yeah, and it's really important to note that the code is the same for all of them, other than just the loading up the bots a little bit differently. But it's the same code for all of them, and taking all of those steps will make sure that by the time you go live, that you have a high degree of confidence that the bot is going to do what you expect it to do. There's a question there, Robert, in the chat.
Yeah, see that. So Nicholas asked, so does the beginner algorithm class come with Lumibot, library of code, and the bear call spread strategy? So the beginner algorithm course, so this, again, we're looking at the options trading course here, but the beginner course, yes, it does come with Lumibot. We'll show you how to use it, set it up, all that sort of thing. We'll teach you how to use, we'll teach you basics of Python if you don't know it, right? In data science, we use a lot of data science to analyze financial markets. We also have a library of code in there for the algorithm trading class, right? There are 2 different libraries of code. We have a library of code for options. We have a library of code for for the algorithms, the basic algorithms, right? So if you take that beginner algorithm class, you have access to all that. You get access to all the videos and all the library of code and everything for the regular algorithm class. If you want to do the bear call spread strategy and all the other options type strategies, that's part of this course. That's part of the options trading course. That's why a lot of people tend to buy them together as well, right? So options trading course will basically take you from the very beginning, teach you how to build an algorithm. Yeah, no problem. Teach you how to build an algorithm and all that sort of stuff. Comes with Lumibot, its own library of code. Has its own algorithms in there that you can use. Lots of really good ones there too. And then you go from that course to the more advanced course of the options class, where we'll teach you how to actually apply all that to the world of options as well, right? So it's a more advanced class, basically, right? No problem, Nicholas. Thanks for the question. Great. Okay, cool. So that's part 2, back testing and live trading. And then part 3, basically what we do is we go over a lot of example strategies. So we want to give you lots and lots of examples for you guys to go over and learn about, right? So bear call strategy, covered calls. There's so many different strategies that we go over. And basically you'll learn how, like, different ways that you can build this stuff out. You have lots of examples to learn from, copy, trade with. You could take them as is, trade with them if you'd like, or you could take them, modify them, change them up, learn from them, and do more complex things. There's a lot of things that you can do with those, right? So go over example strategies. And then week 8, what we also do is we cover futures trading. Futures trading is quite a bit simpler than options, but can also be a very profitable thing to do, especially if you like trading commodities like oil or something like that. So we teach you how to do some futures trading as well in week 8, right? Cool.
And I would just add to that the last day is kind of a, we poll the class in week 7 and just kind of see, what does everybody want to do, and we're quite flexible at that point to be switching it around a bit.
Yeah, I mean, in general, when we do a live class, one of the advantages of a live class is that you have a lot of say in what we cover, right? So if you're taking a live class and you want us to dive into some specific component, or there's something that you're not understanding, whatever, and that live class will go a lot deeper into it, right? And then we could also even get on a one-on-one call to go over that sort of stuff with you as well. So that's a huge advantage of that live class, is that you really get that flexibility and you get to learn from directly from people in the class and ask questions and things like that. Okay, so Juan asks, what broker should I use for the algorithmic and options course? So yeah, so we have 2 brokers that we work with right now. We have Alpaca and we have Interactive Brokers, right? So those are 2 brokers that we currently use. We're adding in TradeStation very soon. That's the next thing on our list, basically. So we're going to be adding in TradeStation as well. And basically the reason why we pick these is because they're very good brokers for working with algorithms. They allow you to paper trade. They have very good fees and that fee structure and that sort of thing. They allow you to trade many different types of assets. I mean, Interactive Brokers is widely considered one of the best brokers in the world. And it's just because of their really good fees, how they have access to pretty much any market in the world. They have like Australia, they have all sorts of things, right? Canada. And they have lots of different asset classes. They have futures, they have options, they have Forex, they have crypto now as well. Lots and lots of really good stuff through Interactive Brokers.
And I would just add that their system is very mature and stable. Like it's a mature system. So you know what you're getting when you're dealing with it for sure.
Yeah, absolutely. Great. And we're adding more and more brokers over time. And like I said, we're adding in TradeStation very shortly. So you'll be able to use that as well if you prefer using TradeStation. Cool. All right. Got another chat in here. Okay, cool. Thanks, Juan. Perfect. All right. So this is the next course coming up. So next live class starts on December 5th, right? And basically, I think I don't know why this is blanked out. I'm gonna need to look into this for a second. I don't know why that happened. But basically, the course starts on December 5th. It's every Sunday at 3 p.m. Eastern or 12 p.m. Pacific, right? Every Sunday. And it goes for 8 weeks, right? So it's an 8-week long course. We recommend about 8 to 12 hours per week to work on this course. The course itself is going to be, we say 1.5 hours. It's really more like 2 hours per week of actual lecture time.
Yeah, I'd say it was 2 hours every time.
Yeah, it's about 2 hours every week of lecture time. And then obviously, if you need help outside of class, you can do the one-on-one. You know, we have our meetings with students, we have our community type of events as well that you could be part of. So there's a lot of great ways to learn. And I also want to tell you, and again, I need to fix this. Our website's doing some weird stuff here, but there's an early bird special going on right now up until October 21st, right? So if you guys want to save an extra 20% on this class, you have about 10 days to do it, right? 12 days to be exact. And you could save an extra 20% on this class.
I think you mean November 21st. Yeah.
It should be November 21st. Yeah, maybe that's why this is blanked out here, but we'll find out what it is. Yeah, all right. Cool, awesome. So that's the class. If you guys want to read a little bit more about this, we have some course projects. We have back testing. We have building and options live train robots. So basically, the two projects you're going to come out of this class with is you're going to be able to back test an option strategy, and then you're going to be able to trade a strategy live as well. Right? Those are two projects that you come out of this class with. If you want to read a little bit more about Neil, some information about him here as well. Right?
Wasn't I handsome 10 years ago?
I feel like we all gained the COVID-15, right?
Definitely.
And then we have some testimonials down here. We got to add a couple more because we have quite a few more on this. But if you guys want to listen to some of our students and how they like the course, you could watch some of these videos here, see what they were able to do and what they thought about the course. All these guys are, by the way, still part of our community as well. So if you go on Discord, you can actually even see these guys chatting. Agim, this is Agim right here. He actually was literally just chatting not too long ago. Right, so you could actually watch a video about him here. Renee Sentayan's also very active in our community, and so is Joel. So you can watch those videos and learn a little bit more about kind of their experiences. And don't take my word for it. Listen to our past students. I think that will tell you a lot more as well. All right. Okay, so that's basically everything here. We have another chat in here. So so there's a question from Nima. If I take the self-directed course, do I have to finish the course in 8 weeks, or can I just take my time and go over the course materials in my time? Yeah, you can take your time. When you take the self-directed course, you have access for however long you need to, so you could definitely take your time. But I will tell you for the live classes, you also have the advantage that when these live classes go, you're going to get the newest material when it comes out, right? So technology changes, things improve and whatnot. And if you join our live classes, you have access to live classes forever going forward. So you'll get not only access to the current recordings of the videos, but also in the future, you'll get any new recordings, or you could jump into classes and that sort of thing as well.
Well, it's interesting that you bring that up because there were a few enhancements that we had come right in the middle of the class, and we brought them right in as part of the class, so people were able to benefit from it.
Absolutely, yeah, and that continues all the time. I mean, I've taught the algorithmic trading course quite a few times, and every single time we teach it, it gets better and better. So we have more technology, we have more example strategies that we can walk you through, et cetera, et cetera. Our community keeps growing. So there's definitely a lot of advantage to doing the live classes. But if you choose to do the self-directed class, then you get access to the past recordings of the videos, and you could take those at whatever pace you'd like to take. All right. Right, cool. Any other questions about anything we covered today? That's pretty much it for the course itself. Any questions, guys? Or any more questions I should ask? Okay, so Daniel asks, can you show what Lumiwealth looks like when it loads? What's the main page look like? So Daniel, you're learning how to code, right? So if I showed you, I could show you a bot here. Let me take a look at one of the bots. So if I run a bot here, this is like a Lumiwealth bot, all right? I would run it like this. So this is the actual bot itself. I can hit run here, and it's going to run the bot, and you're going to look at it something like this, right? This is basically what it is. It's code that's running, right? And basically, oops, I'm trying to exit this. So here we run this code, right? So here I'm running one specific strategy. It's getting started. It's going to go ahead and actually back test that strategy to find out, is this a good strategy or not, right? So we're going to back test this one. This is for the algo trading class, so one of the strategies that we go over called debt trading. And you'll see it run, it's back testing, so it'll take a little while. Basically, when it's done this, you'll see the results of the actual strategy itself, how it performed in the past, right? And you get like a bunch of nice graphs and things like that showing you of how well it did it perform well or not. So here, this one, for example, we're looking at this strategy. It really, it did a very good job compared to S&P 500 over this time period. Oops.
Isn't that one of the strategies you have trading on a live bot?
Yeah, so this is one of the strategies, our debt trading strategy. The red line being the S&P 500 and the blue line here being this debt trading strategy. So this one did a lot better than the stock market. And you can see here, this is all the buys and all the sells, right? So I could like scroll over these and see this is where we bought certain things, where we sold certain things. So we could actually see a nice little graph there. Then you also be able to see how well this thing performed over this specific time period. It made a 200% return, right? And that's versus the S&P 500, which only did 50% over that time. So we quadrupled the stock market over this time period. And we did that not only making really good returns, but also without taking an excessive amount of risk. So meaning our Sharpe ratio is very good compared to the stock market as well, right? So this is basically the interface that you're going to be working with. It's code. You're going to have to learn how to code, but you'll be able to build some really cool bots with that knowledge. All right. Does that make sense, Daniel? Does that answer your question? Cool. Perfect. All right. Any other questions, guys? Lots of good questions today. I really like interacting with you guys. There's lots of really good feedback, lots of really good questions. Yeah, we have a really big library of code. So there's a lot of different strategies that you guys can use right out of the box. And then we'll obviously teach you how to build these things so you can create some more customized ones as well. So another question here. So Daniel asks, are you going to be working on making this more intuitive so we don't have to learn how to code? Yeah, so we're working on a marketplace, and I actually started working on this, and Neil, and we should talk about this at some point. But we're working on basically a website where if you are someone that creates algorithms, you'll be able to put it up on our website and get paid for it. By the way, so if you were to take these courses, I'm hoping that within maybe the next 6 months, you'll be able to put your algorithms up on our website and we will pay you, right? So you take the course and you learn how to do this, and eventually you'll actually be able to get paid for doing this through our marketplace. And we also want to make it on the other side. So if you don't want to learn how to code, then you'll be able to go to our website and see a list of all these different algorithms and just invest in them directly, right? So that's something that we're working on there, right? And that's I think we're going to try to launch that probably by like February, March is the goal, to get the version 1 of that out, right? So she asks, is it possible to have, sorry, what was that?
She's asking what the Sharpe ratio was in the example, and I just happened to remember them. I was looking at them going, oh, okay. Yeah, the ratio for the debt trading strategy has leverage in it. That's why the Sharpe is higher.
Yeah, so I was going to ask, okay, so we skipped a question there. So we jump into NEMA. So what was the Sharpe ratio? So yeah, it's 1.5 versus 0.92, right?
I think that's what I saw, yeah.
Yeah, it sounds about right. I could go back to it here. This is it right here. Yeah, Sharpe ratio 1.5 for the strategy and 0.92 for the S&P 500 over that time frame, right? Actually, Neil, that's despite leverage, right? So introducing leverage will actually lower your Sharpe ratio a lot of the time. So despite this having leverage, it actually, your Sharpe ratio is actually still very good despite that. And the reason why is because it's diversifying very well and it's paying attention to the right signals. Right. The way that debt trading strategy works is basically whenever the government is spending a lot of money, it will go 100% to stocks and leverage it a bit. And then in other times when it's not, it's going to diversify your holdings a bit, so you take on less risk, right? So basically, when the government's spending a lot of money, go all out, right? And then otherwise, you want to like reduce your risk in other types of ways, and that's how that strategy works. And you basically see that when you where's that page? This is the one. Yeah, you can see here that it didn't trade much when there was that big amount of government spending. Which is a very if you back test this, it works out really well. So it's a really good strategy to be in, right?
Yeah, thanks for clearing. I said that wrong. Thanks.
Yeah, no problem. And then so Chi asked, so is it possible to have the bot run through and give suggestions of stocks to pick for swing trades? Yes, absolutely. So there's quite a few of our students that are doing stock screeners, right? So there's lots of people that are doing stock screeners. Basically, you have like some amount of stocks. You're downloading information on each one of them, figuring out which one you want to buy, and purchase those. That's a very common strategy, and a lot of people do that sort of thing. Definitely something that's possible. And swing trading is also something that's quite popular as well, right? So absolutely, you could do that sort of thing. How far back can you test data? Asked she. So yeah, so as far back as you can get the data is basically what I said.
Well, and I don't mean to be flippant by saying it like that, but if you have access to 2 decades of data, then you can go back 2 decades. Like you can go back as far as you want. When you're trading with regular stocks, like when you're doing the regular algorithm course with Lumibot, then you'd be able to get data going long distances back, because getting information back into the 90s and the 80s is possible. But with options, it can be more challenging to find data back that far.
Yeah, absolutely. Yeah. So yeah, so it depends on the data, right? So as far back as you can get the data, you can do it. If it's just for stocks, you can go back like the 1930s, right? Like you go back really, really far if you just care about daily data. Yahoo has it available for a very long time, and I've ran quite a few tests like that where I'll back test for like 90 years, that like but you don't have to, right? You could back test over the past 5 years, 10 years. It depends on your strategy. It depends on what you're trying to do, right? So we have another question here. So Nima asks, do you use quantitative easing as a proxy for government spending? Not in this strategy. This strategy in particular is using the Fed balance sheet, right? So we're looking at Federal Reserve. I could tell you what is it again? Government spending. I think it was. You could use any one of these indicators, by the way. This was government total expenditures. I think this was it. It's either expenditures or is the size of the balance sheet. Yeah. So basically, you're looking at like changes in this spending here that's going to be driving that strategy in particular. But if you want to, you could just as easily use quantitative easing or something like that as well. That is another thing that you could use. Although this data just goes back further, right? Quantitative easing is a relatively new thing that the government's been doing. Okay, so we have another question. The question is, because 2020 was kind of a freak year for the stock market. No, yeah, 2020 was definitely a very unusual year. Absolutely. Yeah, definitely. And if the question is, how is this back test before 2020? I could adjust the dates, right? And I could run that, and you'll see that it still performs very well, even when we go back to, I just did 2020 because otherwise it takes a little while.
Takes too long, yeah.
Yeah, and it's just not really practical for us to run. I could do this from 2010, and you'll see that you get similar results. You still get very, very good results from going back that far, right? So actually, I think 2012, because that's when TMF came out. I'll run that because this uses specific ETFs that didn't exist before 2012. So 2012 was like as far back as you can go for this particular strategy. But we'll run it, and it'll take a little bit of time. But if you guys want to see the results, they're still very impressive results, even outside of 2020. Okay, cool. Yeah, Fed balance sheet is QE. Yeah, exactly. Cool. Yeah, so that's what this strategy is doing. But we have a lot of them, right? This is just one strategy, right? Keep that in mind. We have strategies like the spreads in options. I think it'd be great to show you guys the back testing results for those. So maybe we could put that together and show you guys some of the results of the back tests for the option strategies. Very interesting stuff to look at as well. You know, we have lots of other strategies. We have this diversified leverage strategy. We have ones that look at like Reddit. We have so many different strategies. This is why we're building a website, by the way. It's because we could throw all these things up on a website and allow you guys to invest in these things, as well as learn how to build them and add more new things to it as well. Right. This is what we do. Right. We've been doing this for a long time. We have lots of strategies. And they've been doing quite well. Let me tell you that much at the very least. I'm very happy with my returns personally. No complaints here. Cool. Let's see how long this is going to take. We're about halfway through. If you guys want, we can wait and I can show you guys the result of this. It's up to you guys if you want to stick around or not to see this. We really need to show some of these back test results for the options in here as well. Which would be really cool.
Yeah, you know what, Robert, maybe I'll put together a video on that in the next week or so. I was planning on putting one together anyway. We were talking about that, and maybe we can share it with the participants on the call.
Yeah, for sure. I think that'd be great to show off some of the back tests for the option strategies as well. Cool. This is running here. The keep in mind is, again, this is just one strategy, right? This one does very well, right? But there's a lot of other strategies that perform quite well as well. And what I personally like to do is I like to have my money diversified in several different strategies, right? Because one of them is going to do really well this year. Another one's going to do really well next year, right? So I think diversifying is the name of the game here. I think that's very important.
Hey,
right?
Robert, maybe you could talk about how you're getting the data for this right now. I mean, I think that's kind of neat. Like you just flipped back to 2012, like it's nobody's business.
Yeah, it was really easy. This pulls automatically. By the way, this is all that technology that we've built, right? Lumibot, really simple to back test stuff, really easy to, this back test is just running. I could change the dates very easily. And then it automatically, by the way, after this back test is done, it waits. And if I left my computer on until the morning, it'll start trading in the morning, right? Just automatically just does that. And the data that we're getting here is just being pulled from Yahoo Finance automatically, right? So you don't even have to worry about downloading any data or anything. It makes your life really easy to run this stuff, right? Then we also have the mechanism that you could like put in your own data as well if you want to. So lots of different ways to do that. Okay, cool. So we're getting to the end here. There we go. So as you can see, this one also still does very well over that time frame since 2012, right? So if we're going back further, it has an average annual return of about 40%, right? That's versus S&P 500, which is about 20, right? So like pretty much double the S&P 500. Sharp ratio is still also very good. Not as good as it was in 2020. 2020, it really killed it. But still a better Sharp ratio than the S&P 500 and a better, this is my favorite metric to look at is the ROMAD. It's the return divided by the max drawdown, right? So that metric is very good as well. And let me show you guys the graph here. This is what, you guys use this algorithm, trading it since 2012. This is what your returns would look like. The blue line being diversified leverage strategy versus S&P 500. Pretty significant difference, no? It's a pretty massive difference between the two. This is definitely a good strategy to be using as well. And you guys are right. 2020 is when it really took it. Like, notice it was doing well before, but 2020 just like went on a tear. And that's because of that, looking at government spending and making sure that we're actually trading around that time, right? By the way, this is the idea for the strategy came from Ray Dalio. Ray Dalio has a new book that he came out with, and he talks about exactly this. He talks about how when a government spends a lot of money, it basically debases their currency. And when a currency devaluation happens, then other asset prices go up, right? So that's the impetus behind the strategy and why we created it in such a way. It does very well, as you can see, right? So Daniel asks, so yeah, definitely very cool. So Daniel asks, how robust are strategies with respect to when to trade and more importantly, when not to trade? Yeah, so every strategy is different, right? So you'll have different strategies where you're going to be always invested in the market and you're just going to be changing your weightings and things, right? That's one type of strategy, right? It's kind of like, imagine like an ETF, but like one that automatically adjusts to things, right? You can make it like very custom that way. There's other strategies that will be day trading, right? And I think most people, when they think about algorithmic trading, they think about this day trading type thing, right? Where you're getting in and out of things for whatever reason. You could use machine learning to get in and out of trades. You could use technical analysis. There's a bunch of different ones like that. We'll show you how to use those as well. There are ones that are like news-based, right? Where news comes out about something. We'll be reading like Reddit or, Discord or whatever, right? Choose your news source. We'll be looking at those news sources and doing like a breakout type strategy, right? Where some news will come out and it just pops through the roof. And those kind of strategies you probably want to hold on to for a couple of hours until the news kind of dissipates, right? So it depends. Every strategy is a little different.
Hey, Robert, I was just going to jump in there and comment that when you build a system, right, you can think about individual trades and then you can think about the system. When you get into algorithmic trading and quantitative trading, you build a system that works overall and it has a certain kind of characteristic like this one we're looking at on the screen. And on an individual basis of the trades, they're just part of the system, so that if you want less downside risk and you want to be more robust, as you say, in how you want to not trade, then you would code that in to the decision making of the algorithm. But at the end of the day, when you step back from all of those individual decisions, the algorithm will trade with a certain characteristic. And I think that's kind of what you saw here, is that there's a lot of individual decisioning going on inside of this, but overall, this is how it trades. And so you're trying to strive towards having an algorithm that fits your personality and trades the way you want it to trade. And you can build it with as much or as little robustness as you choose.
Absolutely, yeah. I've seen people making money, doing all sorts of really cool stuff, and like I said earlier, my favorite thing is I like investing in a few different algorithms, diversify my interests across things. If each algorithm is making me double what the stock market's making, but I'm in 4 different ones, then it reduces my risk a lot, and I could make quite a bit of money doing that. So
yeah, what Robert's talking about is really the golden level of algorithmic trading, or whatever you want to call it. That the top levels of algorithmic trading, what they're trying to do is find algorithms that can all outperform in some sort of way a benchmark or a market or something like that. But by having multiple strategies like that, they may not all outperform at the same time. And by combining them together, you get less risk with the same outperformance. And that's kind of what you're looking for at the end of the day.
yeah, absolutely, definitely. Cool. All right. Well, this is a fun presentation. I like the questions you guys are asking. These are all very good.
Yeah, it was pretty good today.
Yeah, definitely. Any other questions, guys, before we finish up for the night? It's been a pleasure having you guys here, by the way. This has been a really fun session to do. I like it when people are this inquisitive.
It was good. I didn't have to tell as many jokes.
All in due time. So yeah, guys. So if you decide to join this course, and I hope that you do, if you guys decide to join the Algorithmic Trading course, the beginner's course, that's the one that I teach. So we'll go through that together, and hopefully I'll see you there. If you guys want to join the options trading course, Neil is going to be your teacher for that one, and very good teacher at that. I think maybe better than me in some ways. I think, hopefully. But
that's too kind.
And then, as I said, we have a bunch of other classes as well. There's can you talk talk a little about your crypto efforts? That's the question. So we're going to be making a crypto class soon, basically teaching you how to build algorithms for crypto. We still have to build that out. It's going to take us a little bit of time to make it, but that's like a huge like a lot of people are asking about that. So we're definitely building it. And we have another course as well on blockchain that we just released. It's going to be starting at the beginning of January, which teaches you how to build your own NFTs, how to make your own crypto coins. That's our blockchain course. So if you guys are interested, this one's really cool. I'm personally very excited to take this class. I'm going to be in this class because the instructor that we got is really good and knows her stuff really well around blockchain. But this is that course on blockchain. If you're interested, I'll put the link in here if you're interested in that. So this course is on how to create your own crypto coins and create your own NFTs, right? which means you can create new things from scratch. It actually technically teaches you how to build smart contracts. So you can even create something totally different, right? You can create like a voting mechanism through this. There's all sorts of like interesting things that you could do using Solidity and like coding for blockchain. If you were to make your own crypto or your NFTs, you'd probably trade them on Uniswap or SushiSwap or something like that, like a decentralized exchange, right? That's most likely what you'd be doing with your own coins. And then if the question is, where would we be trading when we build this? This is our blockchain programming course. We're also going to make a crypto algorithmic trading course, right? So how we trade with algorithms for options, we're going to be doing that for crypto as well. And those we're planning on adding in like all the major exchanges, Binance, Coinbase, Gemini, you name it, right? We're planning on adding in all those exchanges, which is going to be available in Lumibot too, by the way. And you'll be able to trade coins across all those different exchanges. I personally am also a really big fan of using Uniswap and SushiSwap, just because a lot of these smaller coins, they have a lot of potential to shoot up a lot, right? So these tiny coins that, have a market cap of, 10 million or 20 million, if you could pick the right ones, you could really make a crazy amount of money, it's ridiculous. Like I said, one of our students, he turned $1,000 into like 120 grand over the past year. It's absolutely insane. He just picked the right coin, picked Floki. He put some money into Floki and did really well off of it. And now we're working with him on how to actually build bots to automate that sort of process. So how do you pick the right coins and then get in and out of them in specific ways to make a lot of money? There's quite a bit of things that we can do in crypto. I'm very excited about it. And that's going to be one of our next big courses that comes out. Not out yet, but it will be in the future. All right, so thank you for that question, Daniel. It's great. All right, cool. Any other questions, guys? We got another one here. Do you have any arbitrage algos? Not yet, but we're working on them. Right, so in order for us to do arbitrage, arbitrage doesn't really make a lot of sense on the stock market, right? It's like there really isn't any arbitrage left. There's too many big companies doing it. But in the crypto space, I think there's a lot of room for arbitrage, and especially, yeah, exactly, right? So especially like statistical arbitrage, I think there's a lot of value to that, or using machine learning to do arbitrage. I think there's a lot of value in doing that sort of thing, but we need to build out our crypto capabilities first before we could actually do that, right? So first we're going to be working on adding crypto capabilities to Lumibot, and then we're going to build out a lot of those types of things. Sure. So question is, can you explain machine learning? So machine learning is basically the fundamental mathematics of what we call artificial intelligence. It's how Alexa works. It's how self-driving cars work. And basically what it does is it tries to mimic the way that your brain works it's like really advanced statistics, right? Where, you learn in statistics, maybe like y equals mx plus b, or correlation, right? This is like way more complicated versions of that. And it can be very, very predictive. Like for example, in self-driving cars, right? You could predict, is this a stop sign? Is this a person, right? In the same way the self-driving car works to navigate things, you'd basically build an algorithm to do the same thing, right? So you do the same thing in the stock market as a self-driving car would do on the road, right? And that's kind of the basis of machine learning. Let me know if that made sense. A lot of really cool stuff happening with machine learning. It's a major, it's probably the fastest growing field in computer science right now.
My favorite story of machine learning so far is in 1995, they had Big Blue. IBM spent a lot of time teaching it to become the best chess player in the world. And just last year, they sat down with just sort of like a high-end server, but like a regular computer with artificial intelligence on it, with no other games of chess. They just gave it the rules of chess. That's it. And inside of a day, it became the best chess player of all time. It just played against itself and just kept learning and learning and learning and learning and learning. And then by the time it was done, the best chess players in the world would play against, and they're like going, wow, we didn't know you could make moves like that would work. Like it was like they just became the best chess player of the world in a day.
Yeah,
in a day. Like, it's crazy.
And I think that was 20 years ago too. Like,
Well, there was the latest one. That was the one from 20 years ago. It took a while to learn, but and they gave it stuff for chess. But this one, they literally just gave the rules of chess to it. That's it. Rules of chess, and said go. And it was just like,
yeah,
yeah,
definitely really cool. So if we could do that for chess, imagine what we could do for the stock market, right? So the question is, do any of your bots use ML? Yeah, we do have several ML bots. If you take our algo trading course, the last day, we actually cover machine learning. And then we also have like an entire course on this, right? So when you take that like machine learning course, we'll walk you through everything. And there's a bunch of bots that you get throughout the course as well that do machine learning, right? Cool, awesome. All right, any other questions, guys? Lots of good ones. We're having some cool discussions today. So that's kind of our gamut of different courses, right? It's like we have our machine learning course, we have our algorithmic trading course. So algorithmic trading is where most people start. But then we have a machine learning course and options courses, which are more advanced versions of that and kind of go deeper into it. And then we have a blockchain course, which is kind of its own thing right now, separate from the other ones, but you can still use and it'd be really cool if you created your own NFTs, you coded that out, and then made algorithms to actually trade them as well. I think that'd be really interesting to do. Cool. Nima, thank you for being part of this. This is it was great. Thank you very much. This is definitely a very fun discussion to have today. So thank you for being part of this, and thank you everybody. Hopefully I see you guys in class, either in our algo trading class or in our options trading class. But thank you very much for being part of this, and I hope to see you guys soon.
And I'd like to echo Robert's words. You guys were awesome today. Great questions. And with any luck, we'll get to know you better in a class.
Awesome. Sounds great. Good night, guys.
Take care, everybody. Thanks, Robert.
Thanks, Neil.